What's up, everyone? Let's talk about the pre-weekly market analysis. Um, on Nasdaq, as we can see, the dealing range of the weekly level, we are in a consolidation. The last 4 weeks, price is done in a consolidation range all this time here. So we can go lower and we can go higher. So price reached the minus 2.5 standard deviation of this doji candle, the one that was part of the swing low of this fractal consolidation, and he got rejected. He also met this order block here, so we don't even touch the 50% of the order block. So price rejects right here. So measuring this 6 p.m. Candle of the 7-hour chart, we have this levels here. Price closes below the minus 2.5 standard deviation. Also closes below the week set of the 8 a.m. candle, the candle that took the liquidity highs, even this old high here, and closes below the minus 2.5 standard deviations. Also, the Fibonacci levels, from this last swing low, prices close is between 0.705 and 0.786 zone. So I'm expecting price maybe retrace a little bit above, a little bit up, then trade down to reach this minus 40, minus 4.5 standard deviation, since we closed below the minus 2.5 here. And I would like to see sweep these lows, and then we trade higher. This week we have CPI on Wednesday, so it's a very volatile day. Also, February 12 is the first Fibonacci year level, like here. The first level matched with Wednesday 12 is the CPI day. So I'm expecting a very high volatility on this day here. Maybe we can go, like I said, to -4, or even we can sweep these lows and then we trade higher. So we need to see. So on 9-hour chart, this breaker here of the 9-hour chart, price touched the 50% of this breaker to the tick. So that for me is a sign of strong. That price at least gonna retrace. We can even go down, but we couldn't close below this breaker here, the 50% of this break. On the monthly levels, price is still a little bit above the equilibrium of the monthly range. So this, like I said, I would like to see price retrace at least to 50% of be here if we're gonna trade higher. If we keep pushing low, maybe we touch this level, the 75%, that's the lower quarter of the monthly range, and then we trade higher again. The COT is increasing, so last week it was below, now it's entering on the green zone, and the SOI is increased a little bit, it's 0.15 now, and the 6-month program, we are in a buy program. And the seasonality week started with a higher price. So that was the weekly analysis from Nasdaq. Now let's talk about the crude oil. So let's talk about the crude oil. Prices below the dealing range low of the weekly zone. So after the opening, these levels will be updated, but we are in a deep discount. So price is on -4 and -4.5 standard deviation of the second layer. We have the first layer that we measure here, and the second layer, and the measure from this last swing high, price did close below the -2, but didn't close below the minus 2.33 and minus 2.5 standard deviation. So in relation to the dealing range, prices right now is on the 0.786 level. So what I'm expecting for the crude oil, price trade a little bit above, trade low, maybe on the 0.886 level, and then trade higher. On the monthly levels, price a little bit above the 75% dealing range. So like I said, because I'm expecting the retrace to 0.886 level in the other chart, should be something around the 75% of this level. So I would like to see if the price reach this level, then trade up. The COT is increasing, the SOI is decreasing a little bit, and the 6-month program, we are in the sell program. On the seasonality, 5 years, 30 years and all time, the week start with higher prices. 10 and 15 year, the week start with low price. So that was the pre-weekend analysis for the crude oil. Now let's talk about the gold. So gold is in a bullish trend since December 18. So this has this massive move up. It's a very bullish. But if you look to the levels, this first level, one price started going up on December 16. Price is above the -5 standard deviation. Also, this measure and this measure here, they both are aligned. Prices around the -4 and -4.5 standard deviation. And if you guys notice, since last Tuesday, price is in a consolidation range, so it's a signal of weakness. So what I'm expecting is price trade a little bit higher, maybe take off this highs and then trade lower. Looking to the charts, the next trade will be like a short, but I wouldn't take a trade before some confirmation by Tuesday to see if the price will do exactly like this. And also we have the CPI on Wednesday. So probably by Wednesday, we're gonna have like a strong move. On the monthly levels, price is above the dealing range high. The COT is decreasing. The SOI is also decreasing. And the 6-month program is in a sell program. So all these factors looks like signs of a reversal. We have to see. For the seasonality, the 5 years, the week start with lower price, but the all other range, 10 years, 15 years, 30 years and all time, the week start with a higher price. So that was my pre-weekend analysis for gold. If you guys enjoyed this video, please share, like, subscribe, drop a comment below, and I'll catch you guys in the next one. Peace.